Mr. Krishna Kumar joining us on the show to talk us through some of the factors at play in the critical week that we are currently in. Krishna, thanks so much for joining us. Global cues have stabilized somewhat for the meantime, and of course back home we're closely eyeing the budget, discussing whether or not we can really anticipate any major cues for the market this Saturday. What's your sense?
So I think, budget is just another event, and, we have seen that a lot of things are getting done outside the budget. So I think what I think we expect is a budget which basically is more realistic, takes into account the financial constraints that are there, and continues to chug along in terms of balance spend on rural development and urban infra, and also tries to encourage consumption. And particularly in this year, when we are going through a major transition in the automotive sector from a BS4 to a BS6, a leapfrog of effort, I think it is very important that the government realizes the need to compensate the buyers at least for a certain period of time, given the environment in which we are. So I think the savings from the previous budget in terms of bank recap and other things that was there and not there this year, I think the money should be used effectively to incentivize or refund some of the GSTs on automotive sector, and also encourage the housing sector by a kind of a GST refund on people who buy fully built homes and register it this year. So that would clear up a lot of inventory on the real estate, keep the the job market far more robust, and have a big effect in terms of the supply side sectors to both the automotive and the real estate construction industry. I think that's something that the government can look at doing, which would be very positive for the economy.
That anticipation, KK, would you be buying any of the real estate stocks afresh? Because the sector has been grappling, but the stocks are not, or any of the ancillaries, your sanitary ware, tiles, paints, etc., any of those stocks or sectors?
I think one is is to play regional strong real estate players in key markets, definitely, and more importantly, the housing finance companies offer a great value in terms of growth potential and beneficiaries of the bond yields coming off. So I think that's a good space where we definitely are adding. The supplier side, in terms of building materials, is something that we've been positive for quite some time and probably been impacted negatively. So we continue to hold faith in them and are adding at appropriate valuations.
What if we get nothing in the budget which could be called as extraordinary out of box? What if this year's budget becomes more like a routine budget, little bit of mention of how fisc would be managed, a lot of emphasis on the vision and very limited announcement on action? Will that spook the market? Because a lot of market men I've spoken to, somehow they are convinced that this will be the first budget of the decade, and given the economic backdrop, this is going to be more like a magical budget. Are we in for a sharpish post-budget sell-off if we don't get anything on Saturday?
I think market players are quite circumspect, I would say, in real expectations. We do believe it will be a very a tight budget, maintain fiscal prudence. I don't think they're going to sacrifice that direction. However, there would be definitely certain expectations of the vision, as you mentioned, in terms of what Mr. Modi looks at India into 2030, and there would be certain wish list in terms of reforms that they could be announced. But I think the market definitely doesn't expect the moon from this budget, and anything positive would be celebrated. But I don't think the markets will sell off if it's a very a 5 on 10 budget. I don't think market's going to sell off because we don't expect too much given the current economic conditions. It's more a cyclical recovery that we are building in. And there's been no pre-budget rally. It's been a rally which has been, which is very synchronous to what's happening globally elsewhere. So I don't think we've seen any pre-budget boost to sell off.
You touched upon the fact that we're awaiting anything that may aid that cyclical recovery, Krishna. So, which are the pockets that you feel are likely to be most impacted? Are you tracking the infrastructure space, roads, housing, real estate? Is that the pocket that you're looking at? Is that the theme that you'd go with? Or are you looking for more of a boost to consumption? What do you feel is going to be more prioritized on their agenda?
A couple of things, if you look at the automotive sector, particularly, as we discussed the BS6 transition, there could be some relief there, which the industry has been seeking for. The second big thing in terms of the automotive, the commercial vehicle sector, the industrial space, is that we talk about pollution and moving to BS6, but at the same time, there are so many old vehicles which are, faulty and running on the streets. So a scrappage policy where the budget provides allocation of funds, on a per vehicle basis of say about 1 to 2 lakh rupees per vehicle based on the type of CV would be definitely welcome. It will really, spring the commercial vehicle industry to a fairly good activity, and that has a big repercussion on the core sectors of the economy broadly. So that's something is an expectation. The second, particularly on the real estate sector, again, I think people have been talking about things like TARP, etc. But I think more importantly, some of the measures taken in the last budget and after that have not been executed, or the benefits are not fully visible. So a game plan to accelerate, the benefits going to the housing finance sector and the developers, to come out of their problems would be fairly welcome, and that could be an area that we are looking at.
Okay, numbers are not great, KK. We can talk about 1, 2, maybe handful of them, and even in those numbers, if I take the benefit of corporate tax aside, the zing is missing. Markets, they continue to forge higher. I thought that if the cyclical recovery is around the corner, steel, cement, construction, engineering and EPC stocks will start going higher. What is moving is still Bata, it is still Page, it is still Britannia, and still those good, consumer dominated stocks. So what is going on in the market? I'm trying to understand the psychology here, KK, because if at all we are waiting for we will witness a cyclical recovery, which means the steel and cement and the cyclical stocks, they should come back. They are not coming back. The consumer is slowing down, yet these expensive consumer-dominated niche stocks, they continue to make a new 52-week high on a daily basis.
I think, if you look at even consumers, there are two parts to it, Nikunj. One is the FMCG guys who are more secular, steady growth, and, the consumer cyclicals are the consumer discretionary, basically, be it the auto, be it the durables or the white goods, brown goods. So there is definitely a pickup on the consumer cyclicals, basically, be it automotive sector, which has seen a good 10% move in the last 2 months. We have seen fair bit of activity on the consumer cyclicals on the white goods, brown goods side, which again have sprung to life, and they are really doing well in the market at this point in time. The second, point is, it's just not only steel and cement is cyclical. Of course, they are part of the cyclical bucket, but I think more so if you look at the capital goods space also, some of these stocks are underowned and have seen moves in the last 2 months, and we are seeing a lot of the capital goods companies, discrete manufacturers, hit close to 52-week highs at this point in time. So it is not just the EPC companies that we are looking at, because EPC companies have their own problems of balance sheet and some of the issues in terms of projects which have been stuck, etc. So there is a little bit of worry there, but people are focusing on industrial goods, consumables on the industrial side, etc., which have been really doing very well. So I think it's a broader bucket of companies on the mid and small caps which have rallied pretty well. Maybe, one of the top engineering giants in the country, which you may be referring to on the EPC side, is still not doing well. But I think, beyond those 1 or 2 stocks, I think more down the line, we're seeing a good traction. And if you look at even commercial vehicles, I think one of the other commercial vehicle majors have been doing pretty well, in spite of the numbers now not doing well. The expectation of the recovery really playing through all of them.
Okay, fair enough. What about broader markets, Krishna? Do you now expect to see market breadth improve consistently, particularly once we have the budget out of the way? Which way do you see sentiment, shaping up? Because on one level, there's been a lot of expectation that we're perhaps bottoming out, growth will come back. But on the other side, we've not yet really seen any concrete signs of that.
I think clearly the indices reflect broader activity. You're seeing that after a long time, over a 3-month period, the small cap, mid caps outperformed the large cap indices, and you've seen the breadth improving. And within even the large caps, you've seen that it's just not those 10 stocks which are moving the indices while they are consolidating and giving up. You've seen that money has been flowing into the other parts of the indices, be it pharma, be it steel, be it cement, be it some of the other spaces like PSU banks. You've seen money flowing there, away from just a secular growth story. So definitely the contribution to the rally over the last 3 to 6 months has been equally coming from the other sectors, and we see this continuing. When do we see this getting more broad-based? I think, as you see the numbers coming through on the ground, like as Nikunj was alluding to, for the next 3 months, you'll see more and more investors and fund managers moving the portfolio to a more balanced, diversified position. And that would definitely bring in a stronger, broader rally into the markets, which will, be positive for investors at large.
Good chatting with you as always, and we'll speak with you after the budget as well to get in a quick reaction.